Hey guys, welcome back to Clockwise Crypto. Hope you guys are moving forward in everything that you do. Diving right into it here. Taking a look at this article, I completely disagree with it, but let's dive in and see what's going on here. So 5 bullish arguments that Bitcoin price just bottomed at 53,000. Let's see what they're saying and why. Taking a look here, bullish divergence boosts Bitcoin rebound. So saying bullish divergence is here. Taking a look here at what they're saying here. If we zoom in a little bit into this chart, we see that they're calling these two tips bullish divergence. They do have a point. Let me look at the time frame on this here, the daily time frame. Okay, so they're on the daily. Okay, let me pull this up on my chart here as well to see what they're seeing. So taking a look here, they're calling these two wicks divergence, and to be honest with you, I don't see it on my stochastic, guys. I just don't. I don't see it on my stochastic. I disagree with the divergence setup, only because if we look here down, okay, I see it. I see what they're talking about here. Up and up. Okay, I see that point. Okay, so that's why they're saying that's divergence. I don't really think that's divergence yet, solely because this point here has been cleared, right? So this wasn't a level of resistance or a level of support, so it hasn't been cleared. It hasn't even been tested. So the price, as we're seeing here right next to it, a couple candles later on this daily time frame, which is probably a week later, it broke. So I don't necessarily think that's valid. I think that was a level that was broken. If we're looking here, I see it was a level of support right here, but it was just cleared and broken. Right here is a wick, and it just looks like the candle right here is filling that wick. I don't see that as valid divergence. Let's go into another argument here that they are saying as it pertains to another setup here. Jacob Canfield saying, and from our side perspective, it's probably one of the cleanest bullish setups I've seen, calling that divergence. It looks good right there. I just don't agree with the levels, guys. I don't agree with the levels. I think those levels aren't valid. And the best way to check this, and we'll do this when we get done with this article, the best way to know if you're at the bottom is if a lower high has been broken. And so you'll see what I'm talking about here once we dive in. But let's hear Wall Street bets on September rate cuts rise. Wall Street traders saw 72% possibility Federal Reserve cutting interest rates by 25 basis points. That is another reason why they're saying a bullish argument. Bitcoin spot ETF total accumulation flow as well. They're saying here that the Bitcoin ETF investors return after July decline, attracting 143.10 million worth of Bitcoin. Taking a look here, U.S. money supply is expanding again. As we see here, Bitcoin miner capitulation hits Bitcoin price bottom as well. So this right here, they're saying Bitcoin miner capitulation metrics are nearing levels seen during the market bottom following the FTX crash in late 2022. Market analysts highlighted several signs of capitulation over the past month, during which Bitcoin price fell from 68.7 down to 53.5. One notable sign of significant decline in Bitcoin's hash rate, the total computational power securing the Bitcoin network. So a ton of reasons why this article is saying bullish. I'm gonna just hit on the technical standpoint. They're pulling technical and fundamentals. I'm gonna highlight this technical analysis here, pretty much calling that divergence. I'm gonna show you exactly how we timed the top during the end of last bull run, and I'm gonna show you how you can predict the bottom when it's happening, and really just looking at the charts, super simple, and to be honest with you, super duplicatable. Let's dive right into it here. Taking a look here at Bitcoin, right? So Bitcoin is making lower highs and lower lows. Okay, lower highs and lower lows, pretty simple. How do you know it's making lower highs and lower lows? You see just basic market structure, guys. So basic market structure, as we can see, we're going up, down, make a new low, come up, make a new low, come up, make a new low. Like that's the trend for a downtrend. Okay, so that's what it looks like. Okay, so the same thing happens. This is on the daily time frame. The same thing happens on lower time frames. How you know there's a change of trend is when one of those lower highs are broken. Okay, so where are the lower highs? I'll show you, just like we show some of our followers when they ask us about trading. Here, Lower high points. Where are the lower high points? Lower high points are here. This is a lower high. This is a lower high. This is a lower high. Okay, these are all lower high points, and these are lower low points. That's a lower low. Why is it a lower low? Because it's lower than the lower high. So lower high, lower low, lower high, lower low. That's how market structure goes. Okay, how you're able to time this the correct way. Okay, and this is just basic technicals. This isn't even including the fundamentals, because I truly believe that, yes, fundamentals are true, but for me, how we're able to call the drop before, it was going to happen regardless anyway, right? And so that's how we look at it. Like, yes, the market's dropped because of Mount Gox, okay? But how the technicals were lining up, the market was going to drop anyway. This was just a reason why. Okay, so it was like, if that makes sense to you, I hope that makes sense. Like, the markets were lining up from a TA side to drop either way. Okay, when the Mount Gox situation happened, it just gave it a reason to do what it was already going to do anyway. That's how I look at the markets. Okay, so as we look here, it's a daily time frame. How you're able to time the bottom. Okay, and this is what many people aren't going to show you. I'm going to show you, because this is how we time the top. You look for a break of structure. What is a break of structure? A break of a lower high. That's how you're going to be able to time the bottom, but you must do it on a lower time frame, because you don't know higher time frames, you'll be kind of late. But we'll go down to the 2-hour time frame. Okay, so this is why I'm telling you I don't see anything nearing a bottom yet, because a lower high has not been broken. There's no lower high that's been broken. Okay, so here, go to the lower time frame, and we see the market structure. Okay, you don't have to follow these little dips, but you can if you want. I'll just make it simple for you and just do the big ones. So we'll go over here. We'll look at these lower highs and lower lows. Let me zoom in a little bit. So we pull down, pull up, lower low, pull up, lower low, pull up, lower low, pull up. Okay. This was close, but it didn't break. Okay, we did not break right here. All right, so it was close, but we didn't break. So I'll make a line so you see we didn't break this lower high point, but it came close. Okay, we did not break it there. All right, and my line's a little off, but we didn't break it clearly. So what we're doing now, it's a double bottom right here. So it didn't make a new low either. So this is the range. Okay, so either we're going to make a new low and hit that target at 52.5 that we've been talking about, which will be a new low, and then we continue to trend, or we go up here and we break. Okay, so how do you know it's the bottom, right? Everyone's asking, how do you know it's the bottom? Excuse the chart. I'm sorry. How do you know it's the bottom? Is when we break 58,000. Okay, we have to break and close above 50. Let me just say 59. Let's say 59,000 just to be sure. Okay. And we have to break structure. We have to break out of that. We have to break that lower high point. Okay. Where's the lower high point again, guys? I'll show you. Where's the lower high point again? This is exactly how you time it. This is how we timed it with the all-time high a few years back with Bitcoin. We knew when to get out. Basic TA. This was the lower high point. We came up. We didn't break. We came down. Right? And everyone's worried about we didn't make a new low yet. So that's the level of support. This will be the level we need to break to the top. Okay. So if we break above here, that's the bottom. We continue. We start making higher highs and higher lows. Okay. That's where we continue. All right. That's exactly how you play it. That's exactly how you time the bottom. Has to break those levels. Okay. Follow the market structure. Okay. All this other stuff, like trying to time it just based off feeling, is not going to work. Okay, it's not going to work. That's not how markets move. So this structure is exactly how we time the top. The same thing can apply for timing the bottom. When levels are broken, that's when you'll know. Okay, so some of us even have alarms set up. When it hits a certain price, you get an alert, so you'll know how to move. You'll know what to do. Be strategic like that. Not financial advice, just what we do. And we definitely have this in play. This is why I'm not giving into that sentiment. Oh, it's the bottom. The bottom's in. The bottom's in. I don't think that it's it's responsible to say that yet. Levels need to be broken. We need to break a lower high point needs to be broken. The way you'll know is if this level right here is broken. And let me actually make a crisp line for you. Same thing we always do, guys. We'll make a crisp line for you to see. Make it green for you. Take it off. That line needs to be broken. This level of resistance needs to be broken. See, we got close, and it got close, but it maintained that position and became a lower high point. Okay, so pulling out something fancy for you guys, some Fibonacci, and based off of this. Okay, based off of this Fibonacci retracement. Okay, based off of this, we should head to 52. Okay, and we'll talk about fibs later. I'm actually roll out a course just to break this down to you guys so you guys can see it. I think we do have a course somewhere, some content we used to teach our Forex traders on how to trade. The same things apply to the crypto markets. So we have a clean 88.6 retracement. Okay, so I'm telling you guys, be careful. Do not buy into this. This is the bottom. Yeah, this is it. This is it. Like, don't give into that, because what's going to take is shake down and hit that TP of 52,000, like we're saying. And then that's really going to shake some people up. Okay. And people are going to leave the markets and never return. And then they're going to miss out in 12 months wishing that they never sold. Okay. Seen it happen. It happens. So pay attention to that, guys. Like I said, I'm not calling this the bottom. I don't think it's healthy to call it the Bitcoin bottom yet, unless 58.8 is saying right here. Unless 58.8, if you want to be exact, I know you guys want to be exact. You'd be like, you said 58.8. 58.838.30 needs to be broken in order for us to be, or even for us to be even consider that being the Bitcoin bottom. Those levels need to be broken. Follow the technicals. Okay, so that's what I'm talking about today, guys. I wanted to break that down to you. How do you figure out where the Bitcoin bottom is? That's how we did it. That's how we figured out where the top was. That's how we figured out where the bottom was. The only time you see us go down to the lower time frames, that's the only time you see us go down to the lower time frames, is when we're looking for a change of structure, break structure, which is a change in directional bias, which is a change in momentum. So guys, hope you guys got some value out of this video. Keep moving forward in everything that you do. We'll see you soon.